Hello, this is SeeWing Yee from the Yee Real Estate Network. We are a real estate investment club, been in existence since 2005. We're talking almost 18 years. What we do is we help out-of-state investors, mom and pop investors, wherever you're located, physically anywhere of the 50 states. We help you folks buy out-of-state investment properties in the best cash flow markets in the country for the past 18 years. We have helped hundreds of investors over the years, and we've been highly successful because we enter the market ahead of the game, if you will, and we put all the teams together, turnkey, one-stop shop, everything under one umbrella. If you buy properties in one specific neighborhood within the market that we represent, we have network investors available in that specific location, property management, network real estate consultant, investment counselors, property managers, as I said, investment loan agents, title companies, and the whole 9 yards. I mean, buy those property, most of them are off market. They are not in the multiple listing service. So we are always ahead of the market, ahead of the game. So today I'm gonna discuss about how we do a lot of research and we'll put together those off-market turnkey properties where we have done most of the research for you. So if you have a full-time job, if you does not have the time or the effort to put in to research a specific rental properties at a particular place in the US, we have done all that for you, or at least 99% of the. So it's a turnkey. We are offering you a platter of many of services where you can just jump right in, trust our services. We did because we have years of networking with the local market providers in the market that we're in. So today, what we're going to discuss is we are going to go over one of the areas. In fact, we can go over one of the methodology, if you will, of how we conduct the research for our investors. And so let me find the where is it? So sorry, here it is. All right, so everybody see this? All right, so we use many research methodologies over the years, and one of the source that we consult with, one of the source that we use some of their information. Of course, this is public knowledge. I mean, John Burns is a real estate consulting firm that provides free information out there, especially in the last few years about what's going on with the real estate investment world. So, and in this particular case, he called it the Burns Single Family Rent Index, new lease. So September 2021. Again, our investment club specializing in residential investing, single family home, duplex, triplex, and fourplex, kind of a 1 to 4 unit. This is the limit where we go. This is our business model, if you will. So if you look for commercial real estate investing, if you're looking for multi-units beyond 5 units, we do not necessarily specialize in that niche. Our niche is turnkey property, mainly new constructions, cash flow properties, that number cash flow properties, right? Make sure the rent to value ratio, the cap rate are consistent. So there's a lot of markets, although many markets out there that I'm going to go over, you would think, oh, it's a fast growing market, let's buy there. No, the price, there's a limit, how much rent you can collect versus the price you're trying to purchase. So I'll get into more more on that later. So single family rent index is very, very intriguing, the way his company do the research. And so, again, something that you as a real estate investor, as a turnkey mom and pop real estate investor, you might use this resource as a way to help you do some research and due diligence. I have over the years, we rely on some of our research with this company, John Burns Real Estate Consulting. So without further ado, let me focus on some of the things that he talked about. So he said demand for single-family rental homes remain very strong. Obviously, I concur with that. The single-family home investing has grown 6% year over year from on September 2021 from September 2020. And he went over this index. As you can see, we see some nice increases in the past 24 months of the rent situation. Many of you know that the rental acceleration is across the board all over the U.S. because so many people are migrating from those big markets like San Francisco Bay Area, which I physically lived, even though we promote investment properties mainly in the South and Southeast because of the number that works, right? But anyway, he mentioned there are a top, so some of the top cities that we can discuss that, right, of investment opportunities where the rent has been accelerating. So, if we are seeing appreciation in the past 24 months, like 15 to 20%, which is amazing, right? Historic appreciation. It is important for the rent to rise similarly with the appreciation in order for us to achieve cash flow, right? So bear with me. So this first category, this research indicate the core 20 top single-family rental markets with the strongest new lease effective September 2021. So here are the top 1, 2, 3, 4, 5, 6. He mentioned Phoenix, Atlanta, Las Vegas, Riverside, San Bernardino, Charlotte, and Jacksonville. 14% year-over-year rise in rent in Phoenix from September 2020 to September 2021. Atlanta, 12% year-over-year rent increase. So Las Vegas, plus 11%, Riverside, plus 11, Charlotte, plus 11, and Jacksonville, plus 11. And so these are the market where, the population is like 1 million and below, and like a couple $100,000, at the lower end. So this is like a sub-market versus a large metro. So we're excluding, obviously, San Francisco Bay Area, LA, Chicago, Boston, Miami, and a few other large metros. Those people are migrating away from those markets, as you know, due to remote work ability, and people migrating into the suburb, into the sub-market. So the sub-market or in this criteria are as follows, as I mentioned. So if the rising appreciation in this sixth market in the past year is around, let's say 15%, and the rent has risen double digit, that means, the rent to value ratio is very, very comparable. That means it's a good investment opportunity for real estate investors that want to buy in these markets. But having said that, our network market among these top 6 sub-market, we have a relationship with our local team, with our network market in the following location among the top 6, which is Las Vegas and Charlotte. Okay, we do not do Phoenix, we do not do Atlanta, although there are some good opportunities in Atlanta, but we don't do Jacksonville, although we do Central Florida. So that means that we are on top of this market in Las Vegas, in Charlotte, and not too far away from Jacksonville, Central Florida. Whenever single family homes are anywhere from $300,000 or less, maybe slightly higher than 300, and the rent is like 2200, we're talking 0.007% rent to value ratio. That is what we look for. That's the tipping point for us. And Phoenix and Riverside does not have this kind of numerical numbers that we look for our investors to buy in what we call the cash flow market. So our organization, we have a team available in Las Vegas and Charlotte out of the top 6. So that's not too shabby. And then there are non-core 20 top single family resident markets with the strongest new lease effective rent growth in the past 12 months. Once again, these submarkets are obviously a lot smaller than 1 million in population. They may even be smaller than $500,000 population. They are around 200,000 to 500,000 in population in this non-core 20 top markets, and they are as follows: Detroit, Reno, Tucson, and Sacramento. Once again, even though they have double-digit in rent increase year over year, 11% with Detroit, 11% Reno, 9% with Tucson, 9% with Sacramento, we believe the capitalization rate and the higher amount of single-family home relative to the rent is not worthy for our criteria to have a team in those areas. All right, Detroit at one time we have some relationship with a local market there a few years ago, but they have not been providing good service in terms of property management. So we decided to disconnect with a team in Detroit, although they have some good rent to price ratio that can cash flow. So it's either there, here or there. All right. So with that said, let me see what else that we can highlight among this article. So let me pick on now. Then he says right here, rising home prices paint a rosy backdrop for single-family rental sector as prices are likely pricing out some would-be home buyers. So below the table, which I will show you, highlights the year-over-year percentage growth in single-family new lease effective rents versus our home value index. And interesting, Austin, Tampa, Phoenix, and Raleigh-Durham posted a 32% year-over-year home price appreciation, which is amazing, right? Which all happen to have a large single-family rental and built-for-rent presence as well. So John Burns Consulting are tracking 550 plus active leasing built-to-rent communities that they're looking into. As a matter of fact, out of these 4 cities that have rising appreciation rents, we have our team available in Austin and Tampa and Raleigh-Durham, but not in Phoenix. Phoenix, the rent is still too low relative to the purchase price. So we do not see too much cash flow for our investors that are putting 20 to 25% down payment. So am I being very clear with you? All right. So not all market in our estimation, it works, even though, this kind of third-party research indicate, quite a few markets that are growing. So you got to do the numbers correctly. So, and then, so yeah, I mean, again, $250,000 property, need to have a little bit less than 1% rent to value ratio, like 0.007. For example, on a $300,000 single family home price, multiplied by 0.007, that is 2,100, right? So 2,100 is the gross monthly rent. That is the ideal numerical formula that we use, because at a $300,000 purchase price, it rents for 2,100. That means as an investor, if you put 20 to 25% down payment, you will achieve positive net monthly cash flow. Does that make sense? So the cash flow have to make sense based on the down payment parameters, if you will. All right. So let me conclude for what the bottom of this article says. And wow. So yeah, so this last listing shows there are around 20 metros or 20 cities, if you will, that over the past 1 year, September 2020 to September 2021, it shows year over year what is the appreciation rate, which is historic, which is record breaking, as we all know. Does that mean, I mean, moving forward beyond 2021 and 2022, we're not going to see 30% appreciation, right? Year over year. It's just, yeah, it's a one-time thing. So for some investors that have, that we purchase in those markets, which I'm going to show you, they made out like a bandit, right? They made a windfall, if you will, right? They won the lottery. But we can't time the market. It's really time in the market, not timing the market, right? So we all need to have a buy and hold mindset. Buy for the long term. If we achieve short-term appreciation, windfall, that's great, right? But don't worry about the herky-jerky, up and down correction of the market. As long as your property are rented well, rented for cash flow, as long as the renter, they're paying down all your debt obligations, right? Your monthly mortgage, your taxes, insurance, your property management fee, and 5% vacancy factor and 5% maintenance factor, and you still achieve a little bit of cash flow at the end of the month, hey, you are in a win-win situation and ride out the storm with any kind of correction, fluctuation. But I do not see a crash coming. So having said that, so let's go with the 20 markets that have achieved some tremendous year-to-year appreciation. As you can see here on the right-hand corner, Burns Home Value Index year over year %. Austin, a whopping 39%. Yes, we have investors that purchased in Austin before the pandemic, and they made out like a bandit. So they're they're a happy camper, right? And we have also a market in Central Florida, which Tampa is also part of the Central Florida marketplace. We have investors that purchase in Central Florida, close to Tampa as well, and Tampa have increased year over year appreciation at a whopping 30%. We don't do Phoenix, unfortunately, because the rent is still too low relative to the purchase price, as I mentioned earlier. And Raleigh-Durham, yes, we are Raleigh-Durham. We have investors that have purchased there in the past and is purchasing right now, as a matter of fact, because Raleigh, there's a, have you heard of Research Triangle Park? Raleigh is very high tech. It's a very fast growing. I call it Silicon Valley of the East, which is in Raleigh. All right, so very hot market. Multiple offer bidding war situation. Las Vegas, yes, is 29% year over year appreciation, which is amazing. Charlotte, yes, we have market. We have a team in Charlotte. It's growing like 29% year over year. Orlando, of course, we've been promoting Orlando for the past 15 years, but this past year over year, September 2020 to September 2021, have achieved, as you can see here, double-digit appreciation. So we don't do Dallas, we don't do Riverside. It's too expensive. Riverside, way too expensive. For us to cash flow, rent to value ratio, it just does not make sense. Nashville is doing well, but we don't have a market there because we still do not feel the number works in Nashville. Atlanta, we should be in that market, but for some reason, we're not. We're unable to find a good team there that are reputable to work with. San Antonio, definitely, we have a very heavy presence in San Antonio over the years. San Antonio is only 1.5 hours below Austin, so a lot of the migration, a lot of the San Antonio's average home price is 50% below Austin, because Austin prices have, have skyrocketed over the past couple of years. And we see the trends of people going into San Antonio because San Antonio is 50% home prices lower than Austin, and it's only 1.5 hours away. So I've been saying, the Austin San Antonio corridor is gonna be big. It's booming for the next 10 to 20 years, with double-digit population and job growth, and people migrating there from the Midwest, from the California Bay Area, LA, and from the Northeast as well. Okay. And then Miami, no, not Miami, it's too expensive. Houston, a little bit, we don't do Houston, although there are some opportunities in Houston with cash flow, but we just do not have a team there. Columbus, Ohio, Indianapolis, Cincinnati, in Chicago is what we call is kind of a Midwest market. Yeah, I mean, the prices there are, rather low. And you could cash flow, but you're not going to find too many new construction in the Midwest. Mostly older homes are very, very cheap compared to the South and Southeast that we promote in those areas. But it's good too. Midwest is fine, but the homes are quite old, right? And but the cash flow is good, so nothing wrong with there. All right, so that's what's going on. All right, that's all I have to say. To recap, the John Burns real estate consulting, they do a lot of tracking, they do a lot of research. Their information, these articles are public knowledge. You can learn about it. We follow them among many research things that we do. So what they're doing are really in alignment with what our organization, the Yee Real Estate Network, does, which is to find the best market, to get into those kind of market ahead of everyone else, find the right team for the property management. Off market properties we sell, we don't really work with the multiple listing service. So our investors, they don't need to do multiple offer bidding war in open market. So they buy investment properties through our network, and our network have specific properties only for our investors, off market, not available for the general public. So anyway, so if you want to be a member of our organization, all you have to do is just contact us on your information provided at the end of this video, or you can subscribe to our YouTube channel if you will, and but better yet, enter our website, put down your email into our free monthly email newsletters, then you will be part of our official network member, and then you can take advantage, have access to our great turnkey properties that we have available for our members. All right, free membership, nothing out of pocket. So when you buy properties through our network, you just get a referral fee from the selling organization, selling realtor or the builder or those kind of. That's how we help stay in business. Okay, thank you so much for listening. This is just one research methodology that we do. We find the right market, we find the right cash flow market. Is everything turnkey? So passive investors out there, you know who you are. You can have the ability to buy multiple properties in various markets that we have a team on a local ground, on the ground that can help you. And you can do this remotely, easily, efficiently, and scale your portfolio by a number of properties on a systematic basis. And we have a whole team of financial advisors surrounding you to help you achieve long-term growth. Thank you so much. This is SeeWing Yee from the Yee Real Estate Network. Thank you for listening. I will see you on the other side. Goodbye.